In the private practice side of medicine, there are sometimes opportunities to become a partner in a business. And this can be a good opportunity to take ownership of business that has value and can grow in value over time. However, it's important to make sure that you understand the tax implications of how you're compensated if you're going to take on a partnership role. It varies widely. Sometimes you start as an employee and you work for a number of months and then you transition to a partner role. Sometimes you jump right into the partner role right away. And the tax implications get more complex when you become a partner. And the reason for that is because the types of income that are attributed to you and the tax liabilities that you are responsible for become more complex. If you're at first a W-2 employee to work to build up your practice and to become more efficient, then the practice will likely be withholding your taxes through that W-2 format. You get a paycheck, they send taxes to the IRS as well as to your state revenue department if your state charges income tax, as well as Social Security tax and Medicare tax. So during that time, there's not a lot that you have to do yourself. But at the point at which you become a partner, many will begin to either receive part of their income through what's called K-1 and part of it through W-2 income, or in some cases it might all be on the K-1. Now for the W-2 side, it will continue to function as it did before, where taxes are withheld. But any of the compensation that you receive on the partner or owner side is going to come through the K-1. And that's because K-1, I keep saying K-1 because that's the tax form that is used to write out how much each partner has earned. And it can be different types of income. It could be guaranteed payments to compensate for the time that you are contributing to the business. So it's essentially part of your working compensation, but it's labeled differently if it's on a K-1. There might also be other types of income like dividends or interest payments or rental income. If the practice owns a surgery center or if it owns real estate, those entities are going to create different types of income that get passed down to all the partners in various ways. So the tax implications will vary as well based on whether it is earned income, which is more like W-2 income, but you could also have earned income attributed to you if it's because of your active participation in the work in the practice. Like you're doing procedures, you're obviously contributing. You're not just an owner, but you're also actively producing that income through your efforts. But then real estate income, that's going to be taxed differently, potentially. So the K-1, if you see the form, the K-1 has lots of spots where you can put different types of income and losses. And so there's a lot of flexibility with how income and losses and tax liability is structured. And that's why there's a lot of good that can be done, but you really need to know what you're getting into. So if you are considering taking on this sort of a role, you want to make sure that you ask the right questions to understand, how am I going to be compensated? And there's usually two types of people that are in the practice that you can speak to. There's the business manager, and then there are your new colleagues, your physician colleagues. And it's good to speak with both of them. They're going to have different perspectives. The business manager tends to be very knowledgeable about the revenue of the business and when you'll get paid and when they'll find out what the tax liability is for a given quarter and for the year, and what information that they'll need from you. And hopefully they'll also be forthright about what sort of tax liability you should anticipate with the types of income that they're providing. So you want to ask them, what types of income am I going to be receiving and when? And part of it's going to depend on, every practice has a fiscal year, and it may or may not be the same as the tax year, January through December. And that will matter as far as timing. You'll also want to ask them these different types of income. Do you know how they're taxed? And like what my responsibility is. In this case, you're very likely to be referred to the practice's accountant. Now, the accountants, their helpfulness will vary widely. Some of them have been with the practice for a really long time, and you're 36 and you're just getting out of training and you're like really wanting to learn the ropes of this new business. And some of them, truthfully, may not be very helpful because they've been doing this for so long and they know how it works. And they might just tell you, be like, just trust me, everything's going to be fine. That is admittedly not enough reassurance, even for me, even if I know that, yeah, sure, it's going to be okay, but you haven't been in the business and you're making this commitment. You're jumping in and you want to know the ins and outs of this. And so if you're met with that sort of personality, you want to kindly ask for clarification and just try to appeal to them. Like, I'm trying to organize my life budget. I'm trying to understand what my salary will actually be. And, understandably, they might have some unknowns because every year for a private practice is different depending on how productive it is. And there might be some variability in how much tax you're going to owe and when they'll find out, but they should be able to give you some estimates, some reasonable ranges to look for so that you can at least begin to make a cash flow plan. So having spoken with the business manager and then the accountant, the other person type you want to speak with are your new partners, because they live your side of things where they are getting money through these different sources, and they could probably share some experiences with you about like what they do and what their process is. I withhold X% based on if I produced this much. And if I didn't produce as much, like earlier in my career, I didn't produce as much, and so I withheld this much, and either it wasn't enough or it was too much. And side note, there's even someone I know of that just because of following the cautious advice of some of their colleagues, they withheld like way too much, and they got like $75,000 back this spring. Obviously, that's like way too much to be lending to the government and not earning any interest on. So you might run into those situations though. It's not the worst thing in the world, but you learn from them. And if you want to be able to learn from your senior partners, you could ask them these questions. Now, the ones that are much, much older, they will probably not know as much about how you should do things because their buy-in, if there was a buy-in, it will have been significantly different from yours. And their life circumstances is very different. Another thing too about older partners is that their mindset is much more closely focused on exiting. Not to say that they don't want the practice to thrive, but we're all individuals that are trying to take care of ourselves and our families. So their mindset might also be such that they're one foot out the door. And when a partner leaves and they're going to sell off their shares, they are looking for new partners to come on. And when you come on, and if you do have a buy-in, part of the reason for that is because the older partners that have owned shares for years, they are reaping that benefit. They're taking that money from you as their reward for owning shares for many more years than you have. And now you are taking on the risk of ownership so that you also now can hang on to that growth potential. And 20, 30 years from now, you'll do the same. This is not an unnatural process or anything bad. It's just that people are at different stages in their life. And so even your practice partners who are older, they may have some good things to share with you, but they also might not relate in some ways. And so it's good to just take what they say with a grain of salt. What's really good is if you can speak with your physician partners who are like 5 years ahead of you, because they're much more close to like where you are now. And you could get some ideas of when do I need to withhold taxes? Like, do we tend to have more production in Q4, Q2? It varies by practice. And so being able to learn from them and ask them questions about how their income is taxed, if you're assuming that you're in a similar situation where some of it is earned income, some of it is real estate income or other sort of interest-bearing income, learn from them and ask these questions. So that way, when you start getting that paycheck, whether it's a W-2 at the outset or if it's straight to K-1 compensation, when it hits your paycheck, you have at least an idea of how much of it is for taxes, how much of it is actually yours. And then that also will inform how you need to structure your own retirement plan. Because sometimes practices, they will have a 401k or a cash balance plan that you can participate in. And of course, you do want to look into those. Sometimes those are not available though, and it's much more of an individualized process. And then you have to establish your own retirement plan, like a solo 401k. And it's important to be able to know what's sort of coming, what sort of things are coming your way so that you can prepare for short-term needs as well as long-term planning. Overall, I feel from what I've seen with private practices and their growth potential, there's a lot of good that can come from being a partner in a practice. So if you have this opportunity, take it seriously. You just need to dig into the details so that you know what you're doing, because you are becoming a business owner. That requires a lot more analysis of the numbers and the tax ramifications. And if you do that, then you're well prepared and you can set yourself up.